Good morning, everyone. My name is Shri, and I would like to welcome you all to the first Beroe Insights webinar for this winter session, the first of the 5 that we have scheduled for the rest of the year until December. I will be your moderator this evening, and as we can see here, our topic for the day is the impact of the Publicis Omnicom merger on advertising procurement. Before I introduce the speakers and go into the details of the presentation, I just want to give some specific set of instructions. So in order to post a question, you will see a questions panel on your right side. And if at all you have any questions over the course of this presentation, please enter them in the lower box and send it to me. And over the course of the presentation, I will prioritize the high-frequency questions and ask that to our analysts once they complete their presentation. If for any reason, if you lose your connection, I request that you go back to your email where you had received the web link in order to connect to this presentation. And that email is from the gotowebinar@citrixonline.com. which is essentially the confirmation email that we had sent you. If there are any further questions or any concerns with respect to logging in, we suggest that you send an email to Puneet Ramal, and this email is also disclosed in the confirmation email that was sent to you. So without further ado, let me quickly introduce you to 3 of our analysts who will be making this presentation today. Our first speaker is Nirupama. She is a senior research analyst in our marketing services domain. Following her will be Kailash, who is also a senior research analyst from Beroe's risk services domain. And our last speaker for the day will be Prashant, who is also Nirupama's colleague and a senior research analyst from the marketing services domain. So without further ado, Nirupama, over to you.
Thanks, Sriram. Thanks for the nice introduction. And thanks everybody for joining us for the webinar today. I would like to kickstart this session by enlisting a few interesting topics which we would be covering. The first and foremost point for us would be to look at the possible reasons for the merger and the subsequent impact that POG, Publicis and Omnicom, could have across different geographies and service lines. We would also be looking at the hypothetical impact of client clauses on the merged entity and the way forward for procurement stakeholders, which I believe is the most look forward part of this webinar today. Now, the announcement of the merger between the second and the third largest advertising companies, Publicis and Omnicom, in July 2013 came as pretty much as a shock to me as it might have been to you. I say that I was quite shocked because of the fact that these two companies are completely different in terms of the working styles and culture. This led me to ask a question to myself as to what could be the possible reasons for the merger. When I pondered a little bit about this, I arrived at 3 more points. The first and the most important reason could have been to overcome the digital challenges. Now, we are all aware of the fact that as advertisers, we have considerably increased our investments in the digital space, and this has created the necessity for agencies to be better at handling digital data than ever before. I believe that now POG would look at handling this digital challenge better through enhanced combined capabilities. The second most important reason could have been to leverage the media benefits. POG now, by joining hands together, would definitely have the scale and also the ability to form media cloud, which would ultimately increase its media buying power. I believe that they would be using this as an opportunity to leverage the relationship with their existing clients and also use this to add more clients to their group. At this point of time, it's quite difficult for us to gauge the possible steps from POG's end to achieve the media benefits. I think we need to wait and watch and see how it goes and as to how they take it forward. Finally, the third important reason could be to increase the focus
on emerging markets. POG, we all know for the fact that Publicis is quite strong in the European region, whereas Omnicom has quite a strong foothold in the North American region. The merger could help POG, as a group to have a robust global footprint, except for regions such as Latin America, Middle East and African markets, wherein WPP would still continue to dominate. Now, having discussed the possible reasons for the merger, let's go one step ahead and let's look at the pros and cons of the merger. I would like to talk about the pros first. What actually got my attention when this announcement was made was the fact that two half-filled glasses are actually becoming one. I say this because, in my opinion, Publicis is pretty strong in the digital space, and Omnicom has built quite an expertise in service lines such as PR, CRM, and other core advertising categories. Through this merger, I believe Publicis and Omnicom would actually complement each other by leveraging on each other's strengths. I would like to think that the coming together of these two companies would actually help the group to achieve an unrivaled position in the industry. Given the fact that both of these organizations have been in the industry for quite some time, there should be no lack of historic data available with each of them. And I'm sure that this group would be looking at the different ways to use this data for research and development purposes, which might turn out to be pretty beneficial for the advertisers who might be able to plan their campaigns better and hence could look at more efficiencies and effectiveness. Post the merger, POG would be handling close to 35 to 36% of the entire media market, which I think is no small feat. And given the increasing digital budgets, it's quite all right for us to assume that POG would be having enhanced relationships with ad tech firms such as Facebook, Google, and the likes of them. Now, as to whether the group would actually have an upper hand while dealing with these companies is something we need to wait and watch. POG's direct competitor, WPP, has a structure in place wherein there is a one-point contact who would link all the requirements of the advertiser across different marketing categories to the right agency. Publicis and Omnicom individually, before the merger, I believe did not have the bandwidth to actually have this model in place. But now, given the fact that they would be a bigger organization and would have the bandwidth, they might look at replicating this model, and hence is expected to be more of a client-centric organization. Now, coming to the cons of this particular merger, I believe that the most difficult hurdle that POG need to overcome, of course, other than the regulatory approvals, is to bring in a synergy between the different working styles and cultures. Recently, Mr. Maurice Levy, CEO of Publicis, has given a statement saying that they would be ensuring that they get to know each other's cultures better, and they would facilitate the process of integration. And he was also claiming that things are going on the right track, and I truly hope they are. Let me draw a parallel reference here. As most of us would know that in 2006, two technology companies, Alcatel, a French multinational, and Lucent, an American company, came together for a merger, and it did not turn out to be as successful as it was anticipated. The major reason for the same was the fact that they belonged to completely different cultures. They had difference of opinion on almost every aspect of running a business. If the level of cultural difference had this level of impact on a technology company, it makes me wonder a little bit about what could be the scenario for an advertising business which is completely people-driven and is all about creative outputs. I'm sure that most of you would agree with me when I say that in the world of advertising and marketing, everything is about groundbreaking creative ideas and strategies. And keeping these confidential is of utmost importance to advertisers. Finding out how Publicis and Omnicom as a group are going to manage this is going to be pretty interesting for me, given the fact that each of them deal with clients who are competing against each other. The most commonly quoted examples are Coca-Cola and AT&T being with Publicis, and whereas Pepsi and Verizon is with Omnicom. Even with the concept of Chinese walls in place, I believe POG is going to have a tough time assuring the clients with regards to the aspects of confidentiality. What is going to be even more tougher is how they plan to handle situations when two clients from the same industry express interest to work with the same agency at the same time. The last point that I would like to put forth in the cons is that the talent destabilization and the effect and the impact of the merger that it could have on the talent. I've heard a lot of my friends who work in the advertising agencies tell me that they won a particular account because they knew someone on the client side and a casual conversation led them to pitch for the particular account. And it's quite common to see that accounts likes to engage with an agency solely because of the good rapport and understanding that they have with the key personnel who works on the agency side. The merger could possibly lead to an exodus of key personnel from the agencies which could ultimately hamper the client retention strategies. Now that we have looked at the possible reasons for the merger and also the pros and cons, let's move one step further and let's talk about the impact of the merger. And I would like, I believe Shriram would like to add a word here.
Yeah, Nirupama, in terms of pros and cons, all of these are very strong, valid points. So just to reemphasize what you expressed here, from an audience perspective who are listening to our presentation today, right? What is your opinion as an analyst? Because since the pros are, are almost as equal to the cons, so do you take a neutral point of view due to this merger? Or over time, do you think that the Publicis Omnicom merger would actually, have more opportunities for clients as a whole? What is your personal opinion?
Shri, I would like to think that pros definitely outweigh cons in this particular case. There's a lot of things that the merger could bring forth, and I think advertisers need to kind of look into the situation and see what are the leverages that they can probably look at the benefits that they could have from this merger. I mean, at the end of the day, I think it's all about perspective. But if you ask me, I would definitely say that there are a lot of benefits that advertisers can leverage out of this merger.
All right. Sounds good, Nirupama. Thank you. I believe our next presenter would speak more about these perspectives. So Kailash, over to you.
Thank you, Shri. Thanks, Nirupama, for the first part, and I'll just take it over from here to assess the impact of the merger. As we all know, Publicis and Omnicom have entered into a merger that has been structured so that the shareholders of both the companies hold approximately 50% of the equity of the Publicis Omnicom group, and the holding company is going to be based out of Netherlands. So while the operational offices will continue to be based in Paris and New York. Now what this does is it actually brings about a seismic shift in the industry. So if you were to look at this merger from a revenue standpoint, POG now has combined revenues of USD 22.7 billion, and this is as of 2012. Now what this does is it helps the company overtake its nearest competitor, WPP, that has a revenue of 16.5 billion. So in effect, the market share of the new combined entity is close to 32%, which is like 9% over its nearest competitor. The ad industry has been growing organically, and it has also been going through significant acquisitions, more of a trend that is actually being followed of late. Back in 2012, we had Dentsu that stepped up to acquire Aegis, and now in 2013, we have Publicis and Omnicom joining forces. So the one thing that actually surrounds the minds of all advertisers or marketers alike is something that Nirupama also brought into focus, is that the media is something that's going to really be important here. So what's going to happen to the media market share now with the merger in place? I read an article recently where the director of the public affairs at the ISBA, which is the Incorporated Society of British Advertisers, voiced out concerns regarding the potential dangers, especially around confidentiality, and also the power of the new group to probably dictate terms that probably could be again uncomfortable for some clients, which is partly true because there could be an insistence on some of the contractual terms, and if advertisers don't like it, there's almost nowhere to go. So why do I say that? I say that because if you look at the graph, you see that you have close to 90% of the media market share that's taken by the top 5 companies, and I'm talking about the top 5 holding companies here. However, for the bigger brands, and this takes into account the top 20 advertisers of the world, it is definitely an opportunity to leverage on the existing relationship coupled with the new increased media buying power of the Publicis Omnicom group. Back in 2003, I think, the formation of WPP's Group M consolidated about 1/5 of all TV budgets, and that was under one umbrella then. What happened there was that it gave the agency a tremendous amount of clout at the upfront table, especially to get new clients and to consolidate media spend. So, but one reason that really drew my attention here through this merger was the fact that now POG dominates over WPP in the North American and Latin American region. It's really going to be interesting to see how the clients make their media dollar work harder, given that most of the global brands are looking to target some of the emerging markets, and Latin America is definitely in one line there. So speaking of different geographies, I think the POG has also managed to solidify their position in mature markets such as the UK and US and probably some parts of Europe. However, in some emerging markets like Latin America and Asia Pacific, especially in regions such as India and China, WPP and POG are still going to lock horns with each other to strengthen their position. In this aspect, I would probably think that WPP is a notch ahead of POG, and this is primarily due to the fact that they were early movers into these regions. So it did not come as a surprise to me when Sir Martin Sorrell, CEO of WPP, completely dismissed the idea that the merger would actually help POG to increase economies of scale in this region. What actually surprised me was that he did acknowledge that the US might become a sore spot for his company from the merger. Another area which is yet again highlighted from this merger, and I would like to draw your attention to that, is the focus on digital. What this merger essentially has done is that it has highlighted and probably entrusted a vote of confidence for digital advertising. So what this does is essentially it places these ad agencies at the heart of every company's growth strategy, with all of us looking to channelize spend and ensure that we have online synergies coupled with offline synergies. You're definitely going to have digital, which is going to move along and gain importance as we speak. So through this merger, I think the POG can create more opportunities for agencies to influence and impact the consumer experience. But what it also does is that it helps them to stay nimble in the changing media landscape. What's also important as an advertiser or a marketer is to understand what competitors do in the wake of the merger and probably the possible synergy benefits that the merged entity could have. Now, after all, the marketers are going to be able to leverage on media buying, the new extended media buying power of POG, only if the merger is a success, right? So to give you a perspective of the net synergy benefits, what I've done is I've just taken 4 key parameters that I feel are going to influence it, and Shyam has just got a point there to tell me about.
Yeah, sorry to interrupt, Kailash. If we can quickly go back to the previous slide, and one of the questions that came in, and I think it's appropriate I ask this question right here, and it's not a surprising question. Looking by your graph under revenue by geography on the lower left side.
Yep.
So it seems like there's a lot of potential on the emerging markets. So who do you think, in your opinion, would have a greater advantage in the emerging markets? Is it the POG combined entity or WPP?
Thanks, Shyam. That's an interesting question, but I wouldn't be surprised that it came in at this moment because it's a very commonly asked question when you look at emerging markets, especially with all the marketers looking to increase their spend and increase revenues also in the same region. So what we're looking at is essentially Latin America, Middle East, Africa, and Asia Pacific. And I suspect that WPP has got a stronger foothold in this region. And like I said, that's primarily because they were early movers. So even today, if you were to look at the news, you would definitely find that WPP is still on an acquisition spree when it comes to getting new digital agencies under the umbrella, or for that matter, recruiting new talent, especially for these agencies. So there has been a lot of activity, and to be very honest, I think we have some numbers here, and let me just get to that quickly before I proceed. And these numbers suggest that WPP has actually been growing very fast in these markets. So they've been growing at close to 29% in these markets, and that's a phenomenal number when you look at it, right?
Is POG aware of this?
I'm sure they have a lot of other issues to be worried about right now, so I think we'll get to that a little later. So moving on, I'll just get to the hypothetical financial impact of the merger. And like I said, I've just taken 4 main parameters that I feel are going to influence or shape the merger in the coming months. The first and probably the most important point is the issue of client conflicts. And that is really important in the current scenario because everyone's again been asking questions on the same front. So I'll just give you a brief on what this exactly means. See, the ad holding structures were actually created to prevent potential conflicts of interest between competitors, and over a period of time, brands became pretty comfortable with these structures. Now, although the POG group has systems in place to ensure client confidentiality, and Nirupama was mentioning that they have Chinese walls in there, right? So, but I suspect that clients may be quite uncomfortable being part of the same holding of a peer, and therefore I would probably put this as a high risk area. For example, like she also mentioned, Publicis has Coca-Cola and Omnicom has Pepsi. And similarly, in the automotive segment, Publicis also holds the accounts for Daimler, Ford, and Renault, while Omnicom has Mercedes-Benz and GM. So that's one thing that's really concerning all of us at the moment. The second point that struck me as something that was very crucial was the loss of intellectual capital. And to just break that down to something more simpler and to really understand what it really means, you see, when the ad agencies are looked upon, they're often depicted as the people's business, right? So when rival agencies recruit or attract talent from competitors, they usually get access to a vast amount of information, and in the process, they also gain significant advantages. From a merger standpoint, although the CEOs John Wren and Maurice Levy have indicated that the only thing they've been receiving from their people are love letters, and that there will not be any job cuts, which is surprising again, I would like to think that this merger could possibly unnerve certain senior agency leaders. And tactically, if you look at it, it is actually an ideal time for the other holding companies to be recruiting talent from the POG. My third point is the going concern with the regulatory approvals. So why is this a going concern? And the most important thing is that with over 12% of the combined revenues coming from the media business, right, regulatory scrutiny will definitely be a major issue in this merger. Now, what has happened is that some clients have been moving to consolidate their business, especially in the media front, among a smaller number of large agencies. And for them, a merger like this could probably result in a meaningful reduction of choices that are available, right? So this is exactly the type of dynamic which antitrust regulators primarily in the US and Europe would analyze. Although it's pretty uncertain, right, at this stage, regulators could and might force the group to divest certain agency assets that could probably impact competition negatively or change the pricing structure. Now that's something definitely to watch out for. One other point that actually drew my attention was the cost synergies. And in an analyst meeting which was held recently, the CEOs of both the companies mentioned that they're looking at cost synergies of approximately 500 million, out of which they are looking at probably 260 million of cost savings from third-party services and 240 million from internal efficiencies, including support, staffing, and infrastructure. The most surprising part related to the synergies is that these guys have clearly said that they're planning to do this without layoffs. And that is going to be really interesting to see how they do that. What is even more surprising is that they've also mentioned that client conflicts could possibly lead to a decline of 1% in revenues. I mean, that's a wonderful number when you look at it, but I would suspect that there is more to it than there is to see, right? So what we've done here is that we've just quickly built a small financial simulation here. So what we're going to assess now is a best case scenario, a base case scenario, and a high risk scenario. And this is centered around the synergy benefits that the company is going to realize over a period of time. So what we've done is we have just taken the revenues and we've calculated the estimated net operating income loss and also the estimated net income lost through this. So I'll go by the group estimates, and according to them, which is the best case scenario, the client conflicts could lead to a 1% decline in revenues. So essentially what we have is a revenue that's lost of close to 227 million. And taking an incremental profit margin of 20%, we have an estimated operating income loss of close to 45 million. On the whole, if you were to look at the net income lost, that's close to 31 million. But I suspect that when you look at the net combined profit, which is close to 2 billion, 31 million doesn't really make much of a difference, and it's not a very sizable number when you look at it from that point. However, what if some of the big accounts started moving? What if clients probably did not like the fact that they have the peer group under the same umbrella working with the same agencies? Now, they're not going to be happy with that one particular aspect, and that's going to be a major concern, right? So let's just extrapolate this a little further and probably look at a base case scenario where the client conflicts probably lead to a percentage of 2 to 3%, and that I'm talking about is in the decline in revenues. So what we have here, going by the same calculation that we did for the best case scenario, is that we have an estimated net income loss of close to 62 or 93 million, depending on whether it's 2 to 3%. On the whole, the impact is probably a little more than the best case scenario, and this is something that we need to look forward to, because there might be a case where clients might just start decreasing their spend with certain agencies. They will not completely shift their the accounts from one agency to another, but then it happens in a process, right? So this could be one such case. If I were to go more aggressive on this and say that no, this is not going to be the case, we're going to have more accounts moving out. We're going to have a case of talent moving from POG to WPP, which might also be a driver again for new accounts. Then let's just get to a high risk scenario. So what happens in the worst case scenario, where the impact of client conflicts lead to a decline of 4 to 5% on the group revenues? Now what it does is that we have an estimated net income lost of close to 125 to 180 million. But essentially what does this mean? It means that the clients who are moving from POG are probably going to be sharing space now with their competitors, right? So WPP, Dentsu, Havas, IPG, they're all going to be looking and fishing for these accounts. Nonetheless, it allows this group to still retain their top position in the market and maintain their market share at close to 30%, even if that happens. But the one thing that actually comes out from this entire analysis is that I don't really understand what's in it for the procurement stakeholder at this point. I mean, at this point, what I would be really interested in is to look for a way forward with industry opinions that are divided, and we have a lot of opinions for that matter. we're definitely looking at a situation where the procurement stakeholder or the marketer is quite confused, and he or she cannot really arrive at a particular standpoint to take a decision on this. So the one way I think to take this forward is to structure the way forward, and my colleague Prashant will now take you through this, and he will give you a perspective of how we think it is to be.
Okay. Quick question, Kailash, before I let you go here. If we can quickly go back to the previous slide, your worst case was 4 to 5%, right? Why can't it be more than 5%? What are your thoughts about that?
Interesting that you asked me that, Sri. I mean, I thought this was pretty aggressive. You hit the roof there. No, the reason why we chose these numbers was because what we're looking at is that 4 to 5% is a big number. Essentially, when you have to have a 4 to 5% impact on the revenues, you're going to have millions of dollars moving out. And I suspect that that is not probably something that the POG also wants. So they are also going to be trying to talk to their stakeholders, talk to their clients, and ensure that they can retain them on board. So going beyond 5%, in my opinion, would probably be a little too harsh on them at this point. And I wouldn't be so bad to them at this juncture.
So can I assume that your base case scenario is what stands good, especially after the merger during the first quarter of 2014?
Yes, that's the best way to put it right now, because they've mentioned that they're trying to complete the process by Q1 2014. So let's just see how they take that forward. They also had a meeting on October 17th, and I think that went on till the 21st of this month, where they were trying to, come up with new processes and structure their entire organization, have the people mingle within themselves, probably to understand the different cultures, because one company is from a French background and the other is an American. So that's going to be a little difficult there. So they probably come together and they're going to take this forward. So let's just wait and watch to see what they really do from there on. So without any further ado, I think I'll just hand it over to Prashant to answer your cliffhanger question and structure the way forward.
Thank you, Kailash. Now, getting directly onto the question, so what should be the way forward for the procurement stakeholders? And then we would, step into answering the next question, what is in it for you? We perfectly understand that the strategic roadmap for each and every marketer depends on various factors. So the first one could be the marketer's current relationship with both the holding groups. And one also needs to consider the competitor's positioning with these groups. And then the marketer needs to step into analyzing their plans across different categories and across different regions and benchmark it against the strength of the group. So what happens very often is that marketers get lost in these funnel of factors, they turn skeptical, and eventually it all ends up in a wait and watch approach. But in my opinion, this might not be the way to go. Now, irrespective of the industry sectors, let us first see what should be the way forward for these procurement stakeholders. First and foremost, in my opinion, it would be to bring marketing and procurement together. I would first throw an interesting fact over here. We have witnessed that the companies which execute talent exchange programs between marketing and procurement departments have always been the best in mastering the supply landscape. So it is very, very clear from this that it is very essential to convene meetings with the brand managers and the procurement stakeholders at this moment to review the risk management policies, the agency conflict policies, the category plans, and also their cost-saving objectives. There needs to be a sound coordination approach in place to assure that marketers strike the right balance between the procurement and marketing objectives. So what should be the next step? The next step should be to evaluate your current position with these groups. So what I would suggest is that we need to go ahead and estimate the hypothetical impact of the merger on your category plans across different regions, and always ensure you always stay ahead of your competition. Keep a track of your competitors' agency engagements, their current agreements with the holding companies, and the move after the merger. And we do see certain moves in the industry taken by marketers after this merger. So interestingly, and as expected, none of them have cited the merger as the reason. And I would like to just cite one of my favorite examples. A marketer had initially consolidated their media accounts with Publicis and Omnicom. It might be a mere coincidence that the media reviews had happened just after the announcement of the merger. One could expect the marketer to go ahead and bargain for volume discounts with the POG group. But interestingly, the marketer shifted the spend from Publicis to WPP's agencies, thus sharing the spend between WPP and Omnicom. In my view, it is a clear move to reduce the risk involved and to increase the account attractiveness simultaneously with both the groups. So definitely, both the groups would fight to deliver more value for the marketer. Hence, it is very, very essential to track the industry moves at this juncture. Most of our clients were interested to understand the impact of the merger on the industry sectors. But in my opinion, the impact of the merger and the opportunities that could be leveraged totally depends on the advertising procurement maturity of the marketer. So this thought actually, helped us to come up with a methodology through which we actually bucketed various marketers under 4 different segments. So we have the 4 different segments onto your screen right now. So how did we arrive at, how did we actually, benchmark the advertising procurement maturity? Some of the KPIs that we considered to benchmark marketers were the regional and the global sourcing approaches adopted, and the demarcation between creative, media, and digital spend categories. We also consider the KPI effectiveness mechanisms that needs to be adopted and the agency structuring models that needs to be followed. Now, we would just look into the first bucket of marketers. These are advertisers with less category spend and procurement maturity. Here, most of the opportunities are leveraged through service bundling of creative, media, and digital spend categories. Most of the agro marketers and also the B2B marketers fall under this bucket. So here, the marketers prefer to go for direct agency engagements over holding agency engagements. So you might ask me, so what is the impact of the merger on these marketers? And my opinion would be, it is no big a deal. There is not much changes that needs to be looked into. So just stepping into the next segment, we notice marketers in stage 2 stepping into a global sourcing approach. The transformation from a regional to a global sourcing model generally starts with media consolidation. The project-based pricing models are widely adopted compared to retainer pricing models. So when a marketer moves to stage 3, we see them having a clear agency structuring patterns for across different spend categories such as creative, media, and digital. And here there is a shift in trend. Retainer model is predominantly adopted, while performance-based model is tested for strategic relationships. And now the next question might be, who are the kind of marketers who would actually fall under this bucket? We see most of the pharma marketers, media entertainment players, and also automobile segment falling in this segment. And I would also like to insist on the fact that this is just a general trend noticed across sectors. The leaders and innovators in each of these specific industries would fall in advanced buckets. So let us now hope we have looked into 3 different buckets. Now let us just look into the opportunities that could be leveraged by a stage 2 and a stage 3 marketer. First and foremost would be the media rebates. As pointed out by Nirupma and Kailash, POG nearly is expected to contribute to nearly 36% of the media market revenue. Now, the cost at which the media slots are purchased would be drastically reduced. This provides the opportunity for the current clients to negotiate for better volume discounts. So, that being said, what are the other opportunities? So next, in my opinion, the merger opens the door for marketers to frame more effective service bundling approaches. If we see, on one hand, Omnicom has been the leader in marketing communications and core advertising categories, while Publicis has always been the preferred partners for digital and healthcare specific agencies. So here I would just like to throw a note on for pharma specific marketers. The merger, when successfully implemented, POG would be the leader in the industry for healthcare specific services. This segment alone is expected to generate a revenue of $1 billion. Some of the major agencies who cater to healthcare specific services are Publicis Healthcare Group and CDM Group. So what should be the next opportunity? We see that nowadays all major brands have been assigned with a lead creative, a lead media, and also a lead digital agency. The agency structuring and consolidation of services both at a regional and a global level is expected to turn a lot more easier now. Marketers have a wide range of best-in-class agencies to choose across different categories. Okay, let us just take media as an example. We have Starcom Media West, we have Zenith Optimedia, OMD, PhD, and so on and so forth under the same network. In my opinion, consolidation turns a lot easier when the merger is implemented. Now, let us just consider the last stage, which constitutes the most mature and innovative marketers. These marketers have a very well-established content supply chain in place. They have a centralized best-in-class asset management systems and digital tracking tools in place. So, what is in it for them? This merger should ideally set the stage for new opportunities, would be my take on it, where marketers and groups work together to find optimal solutions for data explosion and the current emerging market issues that prevail in the supply landscape. These strategic initiatives would definitely strengthen the relationship with these groups. So these are some of the opportunities marketers definitely need to proceed with caution. It is very crucial to watch out the industry moves and act swiftly. So this cloud that has been created in the supply landscape at present should not be treated as a barrier, would be my opinion. After all, consolidation has turned to be the way of growth for agencies right now. Who knows, this could just be the beginning of it. In my opinion, playing the wait and watch approach might not really work out. It's time for procurement stakeholders to improve their coordination, invest on internal intelligence to gain competitive advantage in this fast evolving supply landscape. So Kailash, hope I have answered the cliffhanger question which you had put to me. Now it would be, now it's over to Kailash, who will just give a summary for the key takeaways of the webinar. Thank you.
Thank you, Prashant, and that was quite a roadmap that I actually saw on that with the 4 stages. So to actually summarize the entire webinar, I think the first thing that you probably are going to be facing is that you're going to get a lot of market opinions on this, and they're going to be completely divided. Many people are going to be pro merger, and many of them are going to have a lot of bad things to say about the merger. So, but one thing that would actually impress me when it comes to an advertising stakeholder and the work that I should be doing is that I have to invest on internal intelligence and coordinate that to gain competitive advantage. For the top marketers, like we mentioned again, they could leverage opportunities through media rebates and effective agency structuring, as Prashant rightly pointed out. And the marketers who are actually engaging with agencies directly, it's not really a big deal because it doesn't not really affect them. But you can benchmark practices based on the maturity that has been shown, and you can actually structure the way forward is the best way to put it. And with that, I think I'd like to hand it over to Shri to give us his comments on it.
Well, thank you, Kailash. I don't think I can tell you my comments for you guys later, but I think since we only have about 15 minutes left, I've got a lot of questions, but I'm hoping that I can get about 5 of these questions answered in today's presentation itself. So, guys, I'm hoping that you would keep your answers brief for these 5 questions so that we can wrap this up in time. So I'll just start off with the first one. One of the obvious questions is, the industry is having a very divided opinion on this merger. So my first question to you guys is, again, it's open to all of you. Anyone can choose to answer. Is with respect to client conflicts, have you seen any major accounts leave, the Publicis or Omnicom? Now, for our audience here, I don't think we can disclose any name in particular, so we have to keep that confidential. But Kailash, if you can say if it's like a very big company or a small company, if you can limit your answer to that way.
You're putting me in a sensitive position, Sri. No, it's a good thing that you asked me that question, because to answer that, I would just say one word, and that is yes. There have been movements, and we have seen some activity in this space. I again would emphasize that I'm not going to take any client names because this is not a platform to do that. But yes, there have been some movements. Although some of it might look like a knee-jerk reaction, and that might be something interesting to watch out for. But on the whole, I think I'd like to quote Sir Martin Sorrell on this, and he also said that he had a very sarcastic tone when he said that I think in an interview to Bloomberg, and he said,
"Sorry, Kailash, really quickly, who is this person?"
We're talking about the CEO of WPP. So what he had to say was that the clients are not going to tell you when they actually move it from one account, from one agency to another. It's going to be a gradual process, and that's going to happen in a very secretive way. That's not going to come out with a lot of news and headlines in the industries. So I think, yes, there has been some activity. So I just leave it at that. I don't want to get into the specifics now.
Okay, well, thanks, Kailash. So going on to our next question, given the interest of time we have left here, do you expect more consolidation to happen in the industry? Because obviously 2 big companies have merged. Would we see more acquisitions or mergers in the near future?
I would like to take that question, Sri. In my opinion, I would definitely see that in the forthcoming days, we could definitely see more consolidation happening, I would say in the next couple of years, 2 to 3 years. And I believe that consolidation has been the mode for quite some time in the advertising landscape. And as Prashant rightly pointed out, consolidation is also the way forward. I believe that IPG looks like one of those agencies, one of those companies, which could be acquired at a later point of time. I say this because earlier, before the Publicis and Omnicom's merger, I did read somewhere wherein it was stated that Publicis was attempting to acquire IPG, but they couldn't do that because they felt the market cap was a little high, somewhere close to about 7.3 billion. And recently, we have been hearing a lot of news that WPP, POG's direct competitor, is also looking at acquiring IPG. I feel that in case if WPP is going to go ahead and try to acquire IPG, they might be the combined revenues might be close to about 22 billion, given the fact that IPG's revenue in 2012 was close to 6.9 billion, and WPP right now is about 15 to 16 billion, and I think they would be somewhere close to the POG. And I'm sure, like I stated earlier, I think consolidation is something that would definitely happen.
Well, thank you. Thanks again, Nirupama. Yeah, here's a very creative question for our team here. So what if two big companies have merged? Will creativity increase?
Sri, I would just like to take up this question. So there are a lot of articles coming up that will this really affect the creativity of the overall agency? What we need to really understand is that this is actually the merger of two big entities, and I really don't feel that this would actually affect the way in which each of the creative agencies are going to function. So I don't think that this merger would really have an impact on the overall creative output of the agencies.
Yeah, Kailash, I think you want to add something to this.
Yeah, I'd like to just add something to that. I think that the question is very interesting again, because when you think of the merger, everyone's talking about the digital part of it, the media landscape, and no one's really pointed out to the essence of the creative product, which is the creative part of it, right? So I think, and I think many people will agree with me when I say this, clients and advertisers share a chemistry, and that goes into a comfort zone. And when it goes into a comfort zone, that is when the creative ideas actually start flowing. So what you're essentially seeing here is an agency account director having a good rapport with the client, and that really builds on the needs of the client, and then he's able to, or she is able to come up with some good creative ideas. So I think that this is going to depend on how they structure their management and how they also approach their existing clients and target their futures, of course.
All right. Thank you, guys. Here's another question. I think, Prashant, you can start off answering to this question, because during your conclusion, you mentioned that POG is probably better catered to meeting the needs of pharmaceutical clients, right? So the question is, what would be the impact of the merger on pharmaceutical marketers, and what specific categories would be affected?
Sure, Shri. So as I had cited, like after the merger, when successfully implemented, POG would actually turn into a leader in serving for healthcare specific services. Just this segment alone would contribute to nearly USD 1 billion. So this being said, what are the major categories that could be looked into by a pharmaceutical marketer? So the certain segments are HCP media spend, which is very unique for pharma marketers. This is one particular segment that I feel pharma marketers need to look into to leverage more media rebates.
Thanks again, Prashant. So going on to our last question for our presentation. Again, this is sort of an analyst opinion kind of question. If POG's competitors were to work on top two strategies now, what would they be? Number one and a number two.
I don't think we really need to take a stance on that, Shrey, because they've already started that. The CEO of WPP has ensured that they've altered their strategies, especially in some of the Asia Pacific regions and Latin American regions. What he's also done is ensured that he changes his strategy with the sales force. He's telling them to go out there and get those accounts that might be in a spot of bother. So they're going really aggressive on this. And what is going to be interesting to see is that we have known for a fact that WPP is now its closest competitor. But we've not seen too much movement or plan of action coming out from some of the other players, like the smaller ones I'm mentioning, like IPG and Havas. And they are looking right now to actually strengthen their capabilities when it comes to digital and other arenas. And they're also recruiting their the talent from POG, which is going to probably build on that. So on the whole, if you were to just look at it, what happens now with the merger is that there is some sort of a duopoly that's created. WPP and POG are going to just lock horns again. So the first part would be what WPP is going to do, and then we'll put the other smaller ones in the other bucket.
So is it fair to say that headhunters are going to be very busy in the advertising space?
Yeah, I think so.
Well, thank you, Kailash. Again, thank you guys, Prashant, Nirupama, Kailash, all of you for your presentation. So this wraps up our presentation for today. Again, thank you all very much for participating. On behalf of Beroe, I just like to express that, there's 4 more webinars scheduled for the rest of this year, and we are hoping to have your participation again. Again, thank you very much, and have a nice day.